When would my taxes go up? There are a number of ways our taxes could go up. Some deal with your personal situation. Some are factors outside of your control. So let's outline some of these today and make sure to stay tuned to the end where we go over two very important questions that you need to be able to answer. So what are some of the more common circumstances that could arise that could cause your income taxes to go up? Well, your marital status could change. And basically this list is going to be changes in a lot of different things. So first off, your marital status could change. To give you a very quick example of that, let's say you're in retirement and you're getting along in your years, you've done all the fun things, you've traveled, you've hit all the places, you've kicked off or checked off a lot of the things on the bucket list, and then all of a sudden one of your spouse passes away. Now, chances are you still have required minimum distributions or other things happening to where your income situation is going to be very, very similar, but now you're going to be taxed as a single taxpayer, not a married filing jointly taxpayer. And so you might be making only slightly less money, but you're going to be paying more in taxes. So that's one situation. Obviously, a change in income level, whether that's an inheritance, raise, business growth, or if you have converted some IRAs into Roth IRAs, that could cause it as well. Property ownership. Shoot, real estate taxes. And depending on what state you live in, those could be extremely high. And so that could be another thing. Or you buy land, you've got taxes that are going to be associated with that. Or changes in your retirement status. Are you retired or not retired? In retirement, that could actually change your tax status for a number of reasons. You might actually be in the lucky position to where you're making more in retirement than what you were when you were working, especially for those that have pensions, because now you might have pensions, your Social Security, which if you make more enough money outside of Social Security, your Social Security is going to be taxed now too, up to 85%. And you might still have to have some of those required minimum distributions or, additional withdrawals from your retirement accounts to live off of. And so that might make you pay more tax than what you were even when you were working, which is important, why it's important to do tax planning, and definitely some other situations, but those are going to be some of the more common ones. However, what are some of the factors that are out of our control? What are some of those things that could come up that could cause a change in our tax status? Well, big one, policy changes, right? State, local, or federal changes in those policies can affect. I mean, there's a lot of stuff going on right now at the time I'm recording this that is on the docket, but hasn't been passed yet for some of Biden's proposed changes, right? Some of those are pretty intense. I don't think they're going to go through all of them, the more radical ones, but that could easily cause us to pay more tax. Changes in capital gains tax. Once again, policy changes. That's a big one that's on the docket right now. They're wanting to tax capital gains as ordinary income if you make a certain amount of money. They could change the inheritance tax, right? And so right now, I believe it's like 11 and some million dollars before you have to start paying any type of estate tax. And they could bring it all the way back down to $1 million or even less. Maybe they could just say anything gets that estate tax applied to it. They can do whatever they want if it goes through, if the law actually gets changed. Stepped up basis for inherited assets at death. So if you bought a house for $100,000, it's worth $300,000 now. There's a $200,000 gain in that. If you pass away, your kids won't have to pay anything on that gain right now. But if that changes, they may have to pay tax on that $200,000 gain. Right. So that's a policy change that could happen. Then we've got business taxes, business deductions, personal deductions, if those are changed or taken away, exemptions that are changed or taken away, which, by the way, exemptions did disappear for the last Tax Cut and Jobs Act change, but they increased the standard deduction to kind of make up for that and increase the child tax credit. So there was a lot of like give and take and move and pulling that were going on. But also indirect taxes, like non-taxable interest from municipal bonds actually causing more Social Security to become taxable. That's a way you can pay more in tax. Stealth taxes called fees or penalties, think Obamacare. Or if you make too much money, Medicare itself is means tested. So once you hit certain income thresholds and you're on Medicare, now your monthly premium has been increased because you, quote, make too much, right? So that's another one. Even though those aren't called taxes, it's less money in your pocket and more money that goes to Uncle Sam. That, in my opinion, is a tax, my friends. So the list just continues to go on. There's only a few areas that could devastate a retirement because of a big drain on your assets, and taxes could be one of those big areas. And it could be a sneaky area because let's say you've got, $1 million deferred in your IRAs and your 401ks or whatever. And if I asked you how much you have, you'd probably say $1 million. I mean, most people would, because you get your statement, it says $1 million, you've got $1 million, right? But that tax deferred status means that you are in a partnership with the IRS. Let's call it 25%. And so if you're going to have to pay 25% tax on all of that right now, you don't have $1 million, you have $750,000 actually, because that's all you're going to be able to spend is $750,000. What would you say if you had a business partner out there that said there's no limit to what percentage of profits that they could take, but you just get what's left over? See where I'm going with that? Exactly. That's kind of what the federal government gets to say. That's the partnership that we're in. And given the choice, I don't think anybody would sign up for a partnership agreement like that. All right. But having a tax deferred status, we all did, right? We signed it. So depending on who controls the presidency of the Congress, the percentage they get to take is up for vote every 2 years. And that percentage can be a big drain on your assets, kind of like a market loss, right? 25% that you lose to taxes is kind of like a 25% market loss, right? So that tax drain on your spendable income could be one determining factor of whether or not your retirement plan is successful. Or with proper planning, it could possibly help your portfolio last years longer. So 2 very important questions that I mentioned that you need to be able to answer. Would you want the success of your retirement left up to the whims of the government? And do you want the amount that the IRS gets of your assets to go up for vote every 2 years? And there's millions of other voters out there that are voting without your best interests in mind. So I don't know about you, but that would make me very uneasy. And so what we can do, hopefully, is help folks like you maximize the areas that we can control and help you minimize the areas that we can't control. Right. So just to give you an idea, if you want to keep as much of the IRS out of your pockets as possible, then our contact information, calendar links all over the place in the description here. And we can help you pay the least amount of taxes that you're legally obligated to pay. That's what we want to do. Right. So make sure to smash the subscribe button, hit the notification bell. We got content coming out like this every single week. Look at our other website, YouTube channel, Retirement Rescue Radio, which is also our podcast that you can find on Apple iTunes or wherever you end up getting your podcast, Stitcher, SoundCloud, maybe even Spotify. So that's it, guys. We're always trying to bring you more and more content so that we can empower you to live the retirement that you deserve. Take care.